In this video, I'm going to show you what I think is the best strategy to trade all-time highs. Think of NASDAQ, ES, or the indices in general. Also think of gold or, for example, Bitcoin. I mainly trade for investors, but I also like to test these concepts on prop firm accounts. So using this exact strategy is what's gotten me a couple of payouts, where right here, I'm eligible for another payout. On top of that, I run the MMT, where we have helped students achieve the exact same thing. Now, what we're going to discuss is what I like to call the all-time high protocol. Now, before we actually dive into the all-time high protocol, I need you to understand the following. That when we talk about the all-time high protocol, we are of course talking about all-time high instruments. So that means we are looking in this case at NASDAQ or in general the indices as well. You can also use it on stocks. You can use it on anything that is susceptible to reach an all-time high sooner or later. So what I mean by that is that if we take a look at NASDAQ right here, well, historically speaking, we can see that this has been reaching all-time highs over and over and over again. If you compare that, for example, to a Forex, that's not the case. So Forex is a lot more up and down, if that makes sense. The economy can change quite a lot over a day or over a week's period of time. So it's not necessarily set in stone that, for example, Euro US dollar is going to reach a new all-time high right there. If you compare that to NASDAQ, it is arguably a lot more set in stone. Now that's good news for us because all-time high instruments, you're not going to find easier instruments to trade. All-time high instruments are the most easiest thing to trade in the whole of trading, in my opinion. But that's if you know how to approach it. So what is the one thing that is guaranteed? And I need you to understand this from a momentum perspective. What is the one thing that is guaranteed when you are trading an all-time high instrument? That sooner or later, we're going to reach a new all-time high. So what does that mean for your trading? Well, that means, are we more likely to then continue higher? So is it higher probability that for you to buy, essentially, or is it higher probability for you to sell? Well, for you to buy, of course, because sooner or later, we're going to reach a new all-time high. So the way I like to go about this all-time high protocol is there's one simple sentence to sum it all up. Look for another reason to buy. And if you do that over and over and over again, it's very hard not to be profitable. So if we understand that NASDAQ, for example, here, sooner or later is going to reach a new all-time high again, then that makes it a lot higher probability to buy. So a lot of futures traders, they start looking for shorts. They start looking to sell quite often, which baffles me. Unless you have actual data supporting the idea to short, I think, especially when you're just starting out using these strategies, you should always just simply look to buy over and over and over. And historically speaking, we see that the chart also backs that up. So on the monthly time frame, how many up candles are there compared to down candles? Well, there's significantly more up candles. So that doesn't mean that you can't take shorts and that they will never play out. No. It just means that it's lower probability to look for shorts. So again, unless you have specific data proving me wrong that you can look for shorts, then I would say, okay, I take everything back that I said and you can start looking for shorts. Other than that, I would simply look to buy, and buy. Because what is also important to understand, that momentum picture is this monthly fair value gap right there. This monthly fair value gap is something that we can potentially retrace back into to then continue higher from. I can't stress you enough how many people have been so fixated on we need to trade back into the monthly fair value gap to then continue higher from it. So at every single moment in time that we had a retracement, people were too fixated on we need to see shorts back into the monthly fair value gap to then continue higher. That's not how momentum works. The reason why this monthly bullish fair value gap even gets created in the first place, and I need you to understand this, you need to ingrain this into your mind, so I'm going to keep repeating it, is because there is more bullish momentum than bearish momentum. So the one thing that's guaranteed is that we are going to continue higher, not create a retracement to then continue higher. So the momentum is bullish. The momentum is in your favor to buy over and over. Now this is where the all-time high protocol comes in. Because anytime we are going to get these retracements, and I like to take a look at this on the 4-hour time frame specifically, we're going to create these fair value gaps right there. And as you might know them, order blocks, fair value areas is what I like to call them, that we can potentially continue lower from. Now, what is that? That is, as I like to call, order flow resistance. And what is order flow resistance? When I refer to order flow, I refer to a lag, so that is a swing high in this case, that is followed by a fair value gap. So this right here is an order flow lag. So you also see this right here is also a bullish order flow lag. This right here is also a bullish order flow lag because these are swing lows followed by a fair value gap. That makes them an order flow lag. And an order flow lag is very likely to hold. So it's very likely to continue in the same direction as the order flow lag. So if it's a bearish order flow lag, we are likely to continue lower. But that is if the higher time frame bias also supports that ID. So when you see a bearish order flow lag like this formed on, for example, NASDAQ, a known all-time high instrument where you know the higher time frame bias is already more likely to sooner or later reach this new all-time high there again. Then once we get order flow essentially against us, so against our higher time frame bias, so against our bullish bias, that's an opportunity. Why is that an opportunity? Because the moment we overtake this order flow resistance, that's when you want to start looking to buy. Because that's, again, that new reason to buy over and over and over. So for example, this also clears up your parameter, as I like to call it. We had this previous 4-hour fair value gap as well right there that actually held, and we did continue lower from it. So when do we start looking for buys right here? Was there an opportunity to buy right there? No, there wasn't. Why not? Because we never ran the rejection high right there. Okay, we need to take a step back. Let's take a breather for a second right here. And what are we actually talking about when we talk about this order flow resistance and these rejection highs right here? Whenever we retrace back into, for example, this fair value gap, that PD ray, there is 2 moments in time that we can reject from it. On the same time frame, that's likely going to be either the first candle or the second candle. So the way that works, if the first candle is already a rejection, like we see, for example, with this fair value gap. First candle is a rejection. The second candle can simply follow through to continue lower. If the first candle is not a rejection, then 2-candle rejection states that the second candle can sweep the previous candle high to then create the rejection. Now, whether it's the first candle or the second candle that creates a rejection, the important part is that's always going to create a rejection high. So for example, this right here is the rejection high from this fair value gap, according to the rules of 2-candle rejection. So what that means, if this fair value gap is going to be respected and is going to hold, so we are going to push lower from it right there, then now the third candle should continue lower, the fourth candle should also continue lower. We should not run the rejection high right there. As soon as we start running the rejection high, the fair value gap has been completely disrespected. Now, then I also need you to understand, fair value gaps, PD rays, they're valid one time. One time. Not more. There's not a magic 75% level. Well, no, it doesn't work. They're valid one time. And when you start using this right here, so now we have the rejection high. If we start running that rejection high, so by creating, for example, a new expansion candle above it, and an expansion candle is where we have a closure of that candle right there above the previous candle high. So this, for example, is an expansion candle, and it's expanding above the rejection high right there. When we start doing this, now we are running the rejection high. And because we are running the rejection high of that 2-candle rejection, we are now disrespecting this fair value gap. And why is that so important to understand? Is because when you're trading an all-time high protocol, you're just looking for a new reason to buy. And when is there a reason to buy? Well, there's always a reason to buy if there's nothing preventing us from continuing higher. And I need you to understand that a little bit more clearly. So I'm going to explain it over and over and over again. In trading, it's not necessarily about what are we going to continue higher from, which people are too fixated on. For example, we might continue higher from this fair value gap. It is more so what is preventing us from continuing higher at this moment in time. Because if there's nothing preventing us from continuing higher, then there's always a reason to continue higher. So we will keep reaching new all-time highs over and over and over. And that's exactly what you'll see right here. So when you have this order flow resistance and you have, for example, this fair value gap, if we start to overtake it, there's nothing preventing us from continuing higher. So we have a smooth path to continue higher. Same with this fair value gap right there. Once we overtake it, there's nothing preventing us from continuing higher. Same with this fair value gap right there. And that way the path clears up towards that all-time high. And now you can see how many times this happens over and over and over. It happened with this fair value gap. It happened with this fair value gap right there. It happened with this fair value gap, this fair value gap, that fair value gap. I can go on and on and on. On the monthly time frame, it happened with this large fair value gap. And then you have about 2 months, maybe 1.5 months, to just simply look to buy towards the all-time high over and over and over. It's the easiest thing to do in trading. And the funny thing, it's very profitable. So right here, this right now, once we start running the rejection high, it's a reason to buy and look for buys and look for buys. And you constantly do the same. In these legs right here, just simply buy. Simply buy and put your stop loss in a safe place. Now, how do we know if our stop loss is in a safe place? Well, right here, if we take a look at this example right here, what should happen if we are going to continue higher? Remember how we talked about these order flow legs, and we have these bearish order flow legs that we actually should overtake in order to start looking for buys? Well, these order flow legs, when used in the right direction, are super strong. So right here, this is a potential fair value gap. There's no fair value gap just yet, right? But if you enter like this and you cover the low of the future order flow leg, then in the worst case scenario, we create a fair value gap right there. We get a deep retracement back into the order flow leg to then still continue higher. So your stop loss is in a safe place. To then target the all-time high right there. And if you start doing that over and over, you'll see opportunities everywhere. And the thing is, it becomes very clear what you are exactly trading as well. So for example, we have this bearish fair value gap against us. As soon as we overtake it by running the rejection high right there, it's again another entry. Now the beautiful thing about this is that this, I'm currently doing it on the 4-hour time frame, and that's where I have been executing most of those trades to get to a payout. But this doesn't have to be just on the 4-hour time frame, because you can do this on the 1-hour time frame. Look at these fair value gaps right there to overtake. You can also do this on the 15-minute time frame. Look at these fair value gaps right here to overtake. And the funny thing, between the moment that this does work very often, for example, what we see right here, where we are already running the first candle high, the rejection high right there. And then again, you can even go into the 1-minute time frame to also start doing this. If you compare it to this fair value gap right there, that fair value gap, we never run the rejection high. So if we never run the rejection high, there is no trade right there. And of course, will there be losses? Yes, 100%. There will be losses. It's not a 100% win rate, 100% guaranteed or anything like that. But it's a lot more profitable than starting to look for these shorts right there to continue lower. There's a beautiful quote that everyone is a genius in a bull market. So why not take advantage of that? When you have something like a Nasdaq that is bound to sooner or later move higher again and again and again, then why not consistently start looking for reasons to buy over and over and over, instead of making it yourself very difficult. Now, I understand there's traders out there that are doing extremely well, and they start looking for shorts, start looking to sell as well on, for example, on Nasdaq. And that's perfectly fine, because these traders have proven to themselves that they're already profitable. If you have never seen the light of profitability, then just start looking to buy. Don't start looking for sells right here. It doesn't make any sense. You're making it yourself extremely difficult. So what do you actually do when, for example, an ES right here has reached a new all-time high and is very recently coming from an all-time high right here? Well, first you determine what is the highest time frame order flow against you. So the bearish order flow right here. On the 4-hour, you see we have nothing just yet. Okay, so on the 1-hour right here, we have this 1-hour fair value gap against us right now. Okay, perfect. So you now know what to do. All-time high protocol. If we can sting back into that fair value gap right there, create a rejection high right there, if we can start running the rejection high, that right there is an opportunity to buy again. And if this is going to hold, perfectly fine. We pick our poison. We don't get involved right there. We wait, and we wait to see right there if eventually we do overcome and overtake that order flow resistance to then continue higher again. Hello, Arjo from the future. This is what I meant. Rejection high, we run it, we overtake the fair value gap, clear path towards the all-time high. And if that eventually turns into a 4-hour fair value gap, then we switch to the 4-hour. If that eventually turns into a daily fair value gap, then we switch to the daily. Or for example, a good example of the daily time frame is right here. We have a tiny fair value gap right there that we overtake. And again, reason to buy again towards the all-time high. I would advise to start studying this. And if you do have any questions regarding this, then feel free to also let me know in the comments. All right, perfect. Thank you.